Sometimes you just feel tired, feel weak. And when you feel weak, you feel like you want to just give up. But you gotta search within you. Try to find that inner strength and just pull it out of you. And get that motivation to not give up and not be a quitter. No matter how bad you want to just fall flat on your face. Till I collapse, I'm spilling.
This is the Doc with SilverDoctors.com. With the Eurozone in crisis, we're pleased to welcome Cheviot Asset Management's Ned Naylor-Leyland today from London. Welcome, Ned.
Good afternoon, Doc.
Why don't we start off with the big news from yesterday, of course, the 100 billion euro bailout of the Spanish banking system agreed to over the weekend. We spoke with Eric Sprott on Friday, and he stated that the ECB is way behind the curve. He doesn't think 100 billion will be nearly enough, that he estimates their mortgage markdowns, their bank's going to require about 400 billion euros will be required to stem the crisis. But I mean, 100 billion euros is still a massive number, Ned. I think it's about 10% of Spain's GDP, essentially making this Spanish bank bailout about double the size versus GDP as TARP was in 2008. What are your thoughts on this weekend's news?
Yeah, I mean, to me, it reads as a stopgap measure. Effectively, I think it's a lot to do with the fact that clearly the problems have accelerated in the background in Spain, and obviously that led to a big conference call between the different finance ministers. But in truth, as far as I can see, this is an intent to make a bailout. There are actually various things which need to be, the Germans need to ratify the EFSF mechanism anyway, so that's got to roll along. And yeah, sure, I think that the numbers are completely wrong as well. I think that you'll find in due course that this is just a first tranche for Spain, in the same way that Greece has been coming back to the trough on a repeated basis. But I think the most important thing here really is the fact that it does start to smell of contagion. We're now in a situation where it's been Greece for so long, and people in the background and those of us investing in precious metals particularly have been saying, wait a minute, this is just round one, and it's quite obvious that we're now into round two. So I think the numbers, as is often the case with those of us that have skepticism towards these numbers, across the board, are less relevant than the top line of yes, we're going to do it, and initially it's 100 billion euros.
And I think perhaps even the bigger thing, Ireland is now requesting renegotiation of their basically austerity terms for their bailout. I mean, Greece is going to be doing the same. So it's a big precedent also that pretty much there's no strings attached with this.
Absolutely. I mean, I will see or not whether there are or not, of course, because this is another point. It's all very well saying that. Let's see what becomes crystallized, because at the moment all it really is that yes, we'll do it. There won't be big macroeconomic conditions. But remember, recently we've had proposals from the Germans that they would want to try and claim sovereign gold reserves as collateral against any new rounds. And I think that will chime into this whole issue of whether or not they're willing to ratify the new mechanism. So I think you'll find that's political speak at the moment, and I think it'd be very interesting to see what comes out of this and what sort of solid format is agreed, because like you say, the Irish quite rightly have turned around and said, well, wait a minute, I'm not sure about this, as one would expect them to do, and that affects everything, because they can't start operating one way towards one country and a different way towards another. So all that's happened really is the European financial community has admitted that we are now in a contagion environment. At least that's the way I'm reading it.
Right, and so now that we're in a contagion environment, do you foresee the vigilantes merely moving on to perhaps Italy next?
I think that I would imagine that the market is so zombie-like, in my opinion. I think there'll probably be an initial beneficial reaction to markets. I think that won't happen instantaneously. But once the sugar high, and of course these sugar highs are lasting less and less time now, and who knows how long the markets will take this fresh round of recapitalization. Of course, where's the capital coming from? And it's a totally uncapitalized system anyway. But I think we're in a wait and see kind of environment now. It'll be interesting to see what the markets do next week and how they react. I think that the key is the bond market, of course, like you infer. And ultimately, the bond fund managers are the ones that matter. How they react to the framework of this new inverted commas conditions-free arrangement will be very interesting to see.
Right. And I was speaking with Eric Sprott a little bit about that on Friday. PIMCO's Bill Gross is starting to mention and look into gold. What do you see over in England as far as the bond fund managers? And I mean, at some point they're going to start to consider gold, and as Eric Sprott believes, it'll kind of be a tsunami of the funds all trying to pile into gold all at the same time at some point.
Undoubtedly. I mean, I've been banging on about this for a long time. The bond market is where the action really is, of course. Particularly as the equity market now seems to be driven so much by HFD, the algos and very light volume, and the markets are going to be moved by what these big bond fund managers do. And I actually know a couple in London really, very well. One in particular is a very close friend. I had lunch with him a couple of weeks ago, and we were talking about it. And he's deeply invested in physical gold and silver himself. In fact, he's of a similar viewpoint as most of the people on your site and other similar sites in real terms. But of course, he has a mandate he has to operate to. And I had a lunch with him, and I said to him, "Look, you've just got to move first. You've got to man up and basically pitch to your investment committee, that sits behind the mandate of the fund, and say, look, I really feel I must have 1 or 2% as a nominal position in gold as a hedge against tail risk, which is barely tail risk now. It's now sort of body risk, particularly as these guys do understand these concepts. I think it's amazing, really, that somebody with any kind of public profile hasn't already made that move, and I imagine it will happen fairly soon. And I think it will be difficult for other bond fund managers. Let's say someone does it and they then see considerable inflows into their fund on the back of that change. I think that could be very, very telling.
Why don't we talk a little bit about gold and silver here? Sentiment in both of the metals, but I'd say particularly silver, seems to be probably at some of the lowest points it's been for the entire bull market, which often indicates a bottom. What is your short and long-term outlook on gold and silver here, Ned?
Well, always reluctant to give price forecasts, but having said that, if the secular bull market is anything to go by, there's no doubt that we are in a buy zone at the moment. I mean, for me, I think the charts look really good. Actually, I'm quite relaxed about where the technicals, or at least rather what the technicals are showing. Ultimately, you've had sort of triple bottom in gold around 1550. There's a clear, very large wedge in silver, which looks ready to consolidate, and I would anticipate, on the basis of what's going on in markets overall, and with the likelihood of considerable further stimulus, that they will go a lot higher. I mean, look, for gold to do what it's done every year for the last 10 years, it's going to go up $400 odd before the end of the year. Now, it'll be interesting to see whether it does that, and certainly the basis service run by a gentleman called Sandeep Jaitley over here in London is a very interesting guy. He works with Professor Fekete, and his effectively view on backwardation in the LBMA system is screaming a massive rally between here and the end of the summer. So it'll be very interesting to see how this all rolls out. But for me, you can consider that while we're still in a negative real interest rate environment, and that is certainly going to be continuing for a while. But long term, very, very positive on both.
Yeah, I go back to the physical statistics. The statistics are a little bit more readily available for gold, but we've seen, I think last week, China imported 104 tons in April out of Hong Kong. Their imports are up nearly 800% year over year for the first 4 months of 2012 versus 2011. Just last week, Kazakhstan announced an increase of their gold from 12 to 15% of their reserves. India's imports are skyrocketing. It just seems like the physical demand for gold continues to be exploding in the face of declining futures market prices.
Sure, and actually I have a little bit of data there, or not hard data, but sort of something which may be of interest, which is, I know you're aware, I've been involved with the guys behind what was originally the Pan Asia Gold Exchange, and then there's a new silver exchange which they're setting up, is in process at the moment. And something came out of a discussion I had with them the other day, which was very interesting, which is one of the guys there was talking to an individual from one of the main 5 Chinese banks, they were talking about demand within the country for the two metals. And something interesting came out, which is they have these gold and silver backed savings accounts in China. In fact, all of the banks have these offerings, and the demand for them is just extraordinary. I mean, if you extrapolate the demand from this one bank across the other four majors, you're talking 1 billion ounces of silver demand last year and 100 million ounces of gold demand. Now, of course, what's coming as the next comment is the thing that won't surprise you, which is the guy did confirm that they don't actually physically buy any of that metal. Effectively, it's just offset one for one in the unallocated spot or futures markets, depending. I'm not sure exactly which mechanism is used by those banks, but it's just amazing to see all this real demand for real metal just feeding into this system whereby unallocated is fine until it's not, and in due course that will be the case.
I definitely think that's coming. I spoke with Harvey Organ last week, who revealed some pretty scary details from the GLD's prospectus. Basically, it allows swaps, and his research implies that GLD's physical bullion has actually been rehypothecated from the Bank of England, who appear to have basically swapped out Arab investors' bullion that was placed on deposit at the Bank of England and used that as swaps with the GLD. So a financial crisis accelerates. How many gold and silver investors do you believe will at one point wake up one day to discover that the bullion they thought they owned is essentially rehypothecated paper?
Well, look, I've been saying that to clients, potential clients, and my colleagues in London, in the investment world since 2003-4, that effectively you must be careful what vehicle you use. And I think there's no question that at some point this is going to be a huge problem. You'll remember that amazing video interview with Bob Pisani that CNBC ran, where they went into GLD's vaults in London. I'm sure you saw that, Doc. And they, they took his mobile off him, and he ended up in the vaults, and he held up this bar and said, "This is the kind of thing that GLD custody for you."
Right.
And then immediately everyone jumped all over it and said, "Wait a minute, this isn't on the bar list." Now, I don't know if you know this, but they never said anything about that. They basically went all quiet on that issue. And about 3 weeks after it happened, I happened to have ETFS, which is another ETF product company, come in to see me at work. I mean, quite why they wanted to try and pitch a gold ETF to me is anyone's guess, because they should have known that it wasn't exactly going to be a success. But we had an interesting chat, and I brought up some problems, and I mentioned this video to them. And I asked them whether they'd seen it, and they said no, they hadn't, but that sounded quite interesting. Could I forward it on? So I forwarded that to them and said, I'm very interested to have comment from you on what you think about this. And effectively, I got an email back going, that was interesting, and what's even more interesting is it's our bar. So let's just clarify. He was actually holding up a bar belonging to a separate ETF, and to me, with no permission from them. Now, to me, that tells you everything you need to know. Ultimately, with all financial products, buyer beware. You must read the prospectus carefully, look at what you're investing in. And for some people who've got big pockets and want to be trading the market, who knows, maybe a gold and silver ETF is a good vehicle for a savvy investor who has huge money to move backwards and forwards in the short term. But for me, the problem with ETFs is a very simple one, which is, there's no additional reward in owning an ETF, but there are very substantial additional risks, in my opinion. And when it's a risk-reward decision on every investment that I look to make for clients, it doesn't make sense because there's no additional reward.
Right, and like you said, that story pretty much tells you everything you need to know right there. Well, if you can, why don't you tell readers a little bit more about, you just briefly mentioned, and as far as many gold and silver investors were aware that the page was scheduled to debut this summer of 2012, but that's kind of been put on the back burner, or kind of blocked by some influential Westerners. So why don't you give a little bit of a background of what happened with the page and what you're now working on with Andrew Maguire?
Sure, of course. Yeah, it's it's quite unsurprising what happened. Although, ultimately, actually, we're in a better situation now than we were before, and I'll explain why. The Pan Asia Gold Exchange was a sort of dual functioning exchange based in Yunnan province down in southern China, and the thing about it is it was a regional program to develop that area into a trade zone within Southeast Asia. And the main part of the exchange was for domestic use, leveraged products, etc. But they also had this, very, very interesting plan for a fully allocated spot contract in gold. Now, two things happened. The first thing is the bit that you alluded to, which is that other shareholders within Page, because Page is made up effectively of 10 shareholder groups. One is the one that I'm involved with, and then the other 9 were effectively Chinese SOEs or Chinese companies. And the one Chinese company that was listed on NASDAQ is a sort of information technology business. They were the ones that sort of blocked it. Effectively, they started saying that they insisted, because they actually owned slightly more than the others in truth, they insisted on building the platform from ground level up using Chinese tech and Chinese workers. Now, that would have taken a very, very long time, and that wasn't the original plan, which was very frustrating for the people I know who wanted to roll out the fully allocated contract by buying a platform off the shelf. So that happened, which was, for the guys in China, they were just a bit confused. I wasn't particularly. I thought it stunk straight away. But then, interestingly, what followed from that was then a change in Chinese laws as well, which is they turned around the central government and said, we're now not allowing any trading in gold outside of Shanghai. So it got smashed on 2 levels. But the reason why I say I think we're in a better situation is because the guys behind the allocated contract then understood what they were trying to achieve better and understood the dynamics of the market better, and realized that they weren't necessarily going to be welcomed with open arms by the rest of the bullion trading community, or at least on the the custodial side, by setting this new venture up. So they thought about it carefully, and they've gone about setting up a new exchange. Unfortunately, I can't give you the name right now, but it should. I'm very much hoping, midsummer we'll be there, and I intend to go out there at some point as well. And it's a fully allocated spot receipt in silver, which will have monthly offerings. And the idea is for it to offer an alternative for those guys who are trading spot in size through the LBMA system to own something which is transparent, tradable, and should, in due course, all being well, suck metal away from the LBMA system across to this new exchange. Now, I mean, Eric would be able to tell you this himself. It's not a straightforward process setting something like this up. It requires, there's a lot of hard work that goes into it. There are always little gremlins here and there that need to be ironed out, particularly with something like this where it's an international offering. But there's a lot of serious people behind it. It's very much, still on schedule to happen this summer, and I'm very excited about what it could do once it's up and running.
And this is basically, for the readers, is a one-to-one allocated silver exchange, correct?
That's right. It's a receipt. So you're effectively trading a receipt to real metal rather than trading a receipt to an unallocated pool. That's the basic difference. Right. And it's a big difference. It's a big difference.
It's a huge difference.
Yeah, in spot silver, XAG, when you're trading it at the moment, you're trading it through a monopolistic system where you're just part of a massive pool. You're you're an unsecured creditor of those banks, which seems completely ridiculous as well. And until there is an alternative offered to the trader, they will continue to use that system. But if you can provide a liquid tradable receipt to physical metal, which has a deliverable component to it as well, of course, it should suck some serious demand across. And with the help of Andy, who I know very, very well, and clearly he understands what the market needs. We're liaising with these guys to try and get the best possible product out there. But frankly, the most important thing is that it's right, rather than it's done, in the next 24 hours. Because what we need is for it to be live, and it to be, for the big traders in the banks, to be right, so that they can see it. And effectively at that point, you've got to remember, these traders, they are quite self-contained units. They need to make their books right. And if they feel the price is going a certain direction, or if they feel the market's heading in a certain way, they will jump with it. They're not going to move against that, but it needs to be properly viable.
Right. Well, we know that you have to run here, Ned, but we wish you and Andy all the best at helping bring the silver market back under the physical side of the equation. So thanks much for your time, Ned. And can you let the listeners know how to find out more about Cheviot Asset Management?
Of course, yeah. I mean, Cheviot is a fairly mainstream asset management firm. I just happen to be the gold and silver bug that works within it. But it's cheviot.co.uk, which is Cheviot. And actually, if you look in there, I think it's under events on our homepage. You'll find a link to the Sound Money conference that we put on at the beginning of last year. That was a really interesting event, and there are all the videos of the speeches that were made there are available for people for free to just watch and consider, all about the different elements of sound money. And one thing in particular I think might be of interest to the people on your site is there's a presentation by Hugo Salinas Price on there about his silver monetization program. It goes into quite a bit of detail about how it functions, and obviously with what him and Kaiser are up to in Greece at the moment, trying to push that on the Greek political establishment, it might serve purpose for some people to want to go and revisit the detail of how this would work. So that's there on our website. People want to go and have a look at it.
Yeah, I highly recommend that as well. I checked that out myself. I definitely recommend it. Well, it's been a pleasure, Ned, and thanks. We really appreciate your time, and we look forward to talking to you again soon.
Indeed, thanks, Doc, and keep it up. You're doing a great job.